Dan, it's Trevor.
Trevor, hi. Really sorry about that. We had a technical problem at my end.
Okay.
Don't know what was happening. The GoToWebinar was down, and I couldn't start the webinar, and I was panicking. So I think we've got it now. I've just made you the presenter, so you should be able to show your screen.
Okay.
There we go.
There we go. And,
okay, we're looking at EURUSD.
Okay. All right. Okay, let's get cracking. Since
We need to get started. 3 minutes late. Okay, hello everyone, and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us eventually. Apologies again for that mistake there. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel, and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours or so time. So if you'd like to watch from the beginning, you can do so there. And we'd also love it if you subscribe to our channel and click on the bell to get notified of any future publications that we put on YouTube. The webinar handouts can be downloaded from the handouts tab of the control panel of GoToWebinar. If you're having any problems finding them or downloading them, please just let me know and I'll send you a link. The first is a guide to different technical terms that Trevor uses, and the second is a guide to the different products and CFDs that we offer at FX Choice. If you're watching this on YouTube, as I know many of you are, these handouts will be available in the description box just below the video. Please click show more and you'll be able to see them. For those of you who don't know, Trevor is a very experienced technical analyst and trader, over 40 years in the business, former global head of technical analysis at Bloomberg. So we're in safe hands, I think, today. Trevor, over to you.
Thank you very much, Dan, and welcome everybody. And let me just remind you, please, if you have any questions, if there's anything you'd like me to cover, please send a message to Dan in the chat box, and he'll pass that message on to me. And I do like to have questions and comments, and anybody disagrees, anything like that, that's great. Now, but the first thing I want to show you is the relative rotation graph for the currencies. So, Dan, can you see the relative rotation graph for the G10 currencies?
We're looking at currencies, yes.
Okay. All right. So what we can see, for most of you will be familiar with this, but what we've got is a quadrant. The dollar is in the middle. Everything to the right of the vertical 100 is stronger than the dollar, and these are samples from Friday, Thursday, Wednesday, Tuesday, Monday. So it's a tail of each day of last week. So the Swiss franc became stronger versus the dollar as it moved easterly, if you like. The weakest of the G10 currencies versus the dollar is the Norwegian crown. Now on the vertical axis here, so above 100 means with positive momentum. So everything is actually above 100 at the moment. So we've got on the right-hand side of the 100, so stronger than the dollar, we've got the Swiss franc and the Japanese yen. On the left-hand side, we've got everything else, but the direction is generally northeasterly in them. So northeasterly, north means with positive momentum, easterly means without increasing relative performance, but still not outperforming the dollar itself. So what does all that mean? It means really, when we look at the absolute charts of the currencies, you'll see that the dollar itself, and we'll see it most in the euro, which has, of course, is the biggest currency versus the dollar, has been rebuffed by a resistance from April high, and also the dollar high of October 20th. So the October 2020. So the yen and the Swiss franc are to the right, stronger than the dollar. The pound and the euro are heading very nicely northeast. You see here, GBP northeasterly direction, and the euro also doing quite well as well. So they're improving a lot. New Zealand dollar not going in the right direction. Canadian dollar going in the right direction, but far behind. Australian dollar stuck here. So we'll look at that chart, and we'll look at the Norwegian crown as well. So that's the whole picture of how they relate to each other. It's very important, very helpful when you're doing pairs. What should you do versus so-and-so? Mostly the case is it would be long dollar, short the other currencies, but you might prefer to be long Swiss franc versus the Norwegian crown, for example, which wouldn't be something that would be entirely obvious to you. So let's go through them now. So here we can see the big picture really of the dollar itself. So the US dollar is finding support from this March low here, and this big consolidation here between 117 and 120, and that's for the second time holding us, giving us this rising line here. And this, of course, for many people, and this is of course a multi-month big picture, is a potential head and shoulders shoulder. So high, higher high, higher high, lower high here, neckline, which is the low between the left shoulder and the head and the right shoulder, extended hand. Last week we threatened it and bounced from it. So breaking through 117.50 would have been extremely negative from a long-term perspective for the euro, but it didn't happen. The euro bounced strongly. But don't forget that the MACD is still bearish on the weekly chart. So the threat is far from over here. So here is the bounce. Now the bounce has come to resistance, short-term resistance. So the euro is getting resistance from 119 area here through to 119.50, and then through that it has got a clear run to around 121.50 here if we can clear that. So if that bounce can extend, then it can pick up upside momentum. We were warned that it was likely to hold the neckline because of this bullish divergence in the RSI as we made a low and a lower low to make the test of the line. So it has bounced for now, and the whole pressure could be off if we can just clear this 119.50 level, and then I think we could release some energy on the upside. But at the moment we're pushing into resistance. So I think the short-term trend is up for the euro, but beware of the context, which is very threatening indeed. Going now to the pound. Again, I'll start with the weekly chart on the pound. We've got this double top threat on the pound. Of course, this is meaning strong dollar. The low in between here was tested, but we rejected it with this Kuri shadow here and has held it. So far, we just simply got a rising lows pattern, which is still intact. But we've got these two highs the same. So we've got a pretty clear picture here of support and resistance. So we've got resistance at, well, let's say we'll take this first high here at 142.35, and then we've got these other highs here. We've got resistance there, and then we've got support at this 137, crucial support level to hold the double top and the bearish implication, which would be right down to about 132 if we were to break it into this area of support here. So at the moment, I think the prospects of this is that we are in a range. We're in the middle point of the range. The RSI is at 50, around about 50, right in neutral message from it. And during this week, it's probably going to churn around more inside that range. Now, I'd like to look at the Australian dollar because of this pattern here on the RRG chart. So what have we got here? On the Australian dollar, again, I'll start with a weekly chart to get this big picture. And we got this head and shoulders top here, which we broke the neckline of it, and we're tumbling down towards support. High, higher high, lower high, low in between left shoulder and head and right shoulder. Neckline was here, we hesitated, and then we've broken down. So the dollar, US dollar, Australian dollar has gone down, the Australian dollar has gone up, but it's come to a significant area of support for the US dollar there, and which should actually hold the market, or at least stop the fall for the moment. So here we are, pulled down, starting to find support. That's showing up on the RRG chart. The RSI has turned up, the MACD has turned up. The lower highs pattern is still intact but under threat. And if we were to break through this trend line properly, and that would be a breakthrough 74.13 in the dollar, Australian dollar, then we can go higher. That is weaker for the Australian dollar, and resume and join with the other currencies being very weak. So, but there is potential for a move, strong move up here. It is a basing formation. It has completed its objective from the double top on the weekly chart and come back to a significant area of US dollar support. And then over on the left, we had the Norwegian crown. And again, let's go to the weekly chart on that. And we've seen this big bottoming pattern here, cup and handle pattern, if you like, but big bottoming pattern coming back to the 880 resistance level. And that is a major resistance level. I'll bring in that right back to 2018. Look at the importance of that level. High, breakout, low, breakdown. Now, no surprise that we're hesitating at that level, and it's really having trouble because of it, and that's what's putting it at such a poor position in the RRG. And it does look like it's going to churn around more at that level. So here it is at that 880 level, churning around. We've come back. The RSI came low, started to steady up a little bit, but nothing particularly impressive there. The MACD is negative. We've got a rising lows pattern in here, so it might find a bit of stability, but I think continued stifling of the Norwegian crown. Okay, I'm about to move on to the cryptos. Has anybody got any questions on any, or like me to look at another currency before I move on?
Not so far, Trevor. No. If you do have any questions, please don't be shy to ask them.
Okay, we can do that after the cryptos if anybody does want to. Now I've gone to the RRG, relative rotation graph of the cryptos here, and we've got quite a distinct shape here where everything is heading east and everything is east of 100, so outperforming the dollar. So all of these have moved across. Here's Litecoin, which started the week west of the 100 level, underperforming the dollar, to now outperforming the dollar. Strongest is Bitcoin, next Ethereum, and weakest is Litecoin. We know from the charts that's really the order of the amount of damage done by the big sell-off. So much improved, but while they're heading strongly east, they're not heading north. And that means without positive momentum. So they're getting stronger, but not with power. And this means, well, they may stumble at this level. So let's have a look at, we'll go through starting with Bitcoin. And on the weekly chart, firstly, we fell back hard here. I just always want to remind you how far back we came. It wasn't a Fibonacci level, but it was, say, around about 60% level. So that was the extent of the fall, very big fall if this was a bull market. Then we've stabilized. Then we had the break up last week and a powerful move up, and it tickled the 40. People got excited, 40,000 level, that it was breaking up, but it wasn't breaking up. It was just hitting the resistance, significant resistance at it, and has backed off from it. If it can clear 40,000, I think it's got a pretty clear run to 48,000. The fall down here was very, very swift here, so there isn't much resistance. So is it pausing before the break or not? So here it is, the resistance. Here is the behavior on Thursday, and on this morning, just backing off from that 42,000 level. So what does it look like? Well, the pattern is that we are in the short term going up. We've had a series of white candles here. The ADX is at 35, which is quite a good reading. 35 is a good reading, and it is the strongest of the three. So the trend is the strongest of the three. We're very close to the important breakout level. The moving average is positive. The Bollinger Bands are expanding, so there's energy in the market. The RSI went very high and has backed off from a high reading, but it's not bearish at all, really. We'd have to have another sell-off here to take us down through 65 and give us a sell signal, and there isn't any yet. And the MACD is bullish. So overall, this just looks so far like a hesitation at the resistance level, and by no means can we say that 42,000 is not going to break. If we do break it, then we are headed into this relatively easy area for the market to go up. So watch that. There's great potential in this one, either to fail or to break. But I would say, given the energy in the Bollinger Bands, the odds are more that it will break up than it will fail. Now, the next one is Ethereum. And again, going to the weekly chart here, we came back exactly 61.8. So this was a bit further than Bitcoin, and therefore it's a bit weaker than Bitcoin. So here we are. This would be the equivalent of this hesitation, but we're a little bit below the sort of the pressure points here, and it still hasn't broken up yet. On the weekly chart, the MACD is still negative. I don't like this. So here's the resistance. The resistance is at 2,800, let's say roughly there, and we're trading just below it. The resistance is stronger, I think, than it is on Bitcoin, and we are a bit below it. So to me, although with the MACD is positive and the RSI is extremely good, and the ADX is 28, sorry, just to remind you that the Bitcoin ADX was at 35. The trend is stronger in Bitcoin than in Ethereum. Therefore, to me, Bitcoin looks preferable. Then, as far as Litecoin is concerned, we've all got these similar shapes, but looking at the weekly here, this burst through and collapsed down 70-something% here down to 120. So the damage to the bull case was most devastating in Litecoin. The MACD is strongly bearish on this, and it really doesn't look, hardly bullish case at all in this. Here we're pushing into resistance, but there's loads and loads of resistance above. It's going to find it very hard. It's being dragged up by its bootstraps rather than pushing at all. There's no threats here at all. There's just too much resistance above. The ADX on this is at 25. This is the lowest of them all. This is the least attractive, has the weakest trend. So Bitcoin, just tantalizingly close to the breakout point there with strong upside momentum. Ethereum a bit below its breakout point with less strong upside trend, and Litecoin absolutely catastrophically damaged, bull case, and lots of resistance above. So it's a very clear message from those three. All right, before I move on to gold and silver, any questions, Dan?
Actually, Trevor, we do, but the person has asked, the question is from Mod. Thank you very much for your question. He says, what is your view on gold? So he's preempted you.
That I can answer right now. Okay, thanks. But more questions, please. I love the questions. So let's have a view on gold. Well, I'll look at gold. Now, the stronger dollar during the week and after that Louis Fed statement has put pressure on gold again. We looked like we were threatening to break out of the middle of July high of 1830 here, and then it disappointed us by dropping off. The weekly chart is looking, okay. We're going up, indifferent both in the RSI and the MACD message from the weekly chart. We've got lower highs pattern here, which is bullish, but we've got higher lows pattern, which is bearish, sorry, and higher lows pattern, which is bullish here. And we were very pleased that it held at around the 1720 at this previous resistance became support. And so we are holding up, but there is a resistance ahead really around 1880. So here we are testing this level. Is it going to break it? It's gone neutral on the RSI. The MACD is slightly positive, is barely positive. The Bollinger Bands are narrow. There's not a lot of energy in this. It's not a squeeze, so it's not a threat of a, like this was a squeeze here, and warned us of a potential impulsive volatility break. No, we haven't got that message. It actually more indicates that we're likely to go a bit sideways below this resistance point here. But if we can clear the 1830, then I think we've got a clear run to 1880, and well, can you imagine we get through 1910 and beyond that? The resistance isn't high, isn't strong at this level, but the ADX is low, 17, telling us the market's flat. And I think, unfortunately, it looks like it is going to be flat. One thing I would like to do, though, is we've got a bit of a change in condition in the gold-silver ratio. We've been liking mostly gold versus silver, and we've preferred it, and last week we were looking at it making a new high, gold versus silver ratio, but this all now looks quite toppy, doesn't it? And so that the preference would be if you are bullish, to take the bullish trade in silver rather than gold. This looks quite a threatening pattern here. So let's look at the silver here. So silver, we came down. We made a new low. We had a bullish divergence in here, so that warned us that this low could be the end of the move. We pushed up strongly, but now there is resistance at 2610, and really I find that resistance quite stiff and quite unattractive. So the idea that silver looks like it's going to outperform gold, but the absolute chart, the resistance on silver is, I think, stronger than the resistance on gold. So personally, I think that situation may reverse back again. I think, but it hadn't broken down on the silver gold ratio, so maybe it's just not going to break down actually, because this chart looks better. The gold chart looks better. At this point, we always look at the gold versus the S&P, and some reason it's didn't fulfill, but look at that. It's now very clearly taken out that 2007 low. I probably won't show you this graph anymore. It's better to be in the stock market, US stock market, than to be in gold. And that trend has reasserted itself. We've broken to a new low, and gold underperforming the S&P is a feature, and a continuing. So given limited capital, better to be in the stock market than to be in gold. Moving on to Brent crude oil. The resistance here on Brent crude oil, we're struggling with resistance from the 2019 high. All this churning here is going on for that. It's such an important level. If we break it, there's another high at 2018, but after that, there's very clear ground, because we fell back from, well, above $100 so fast. If you remember back all those years ago, those of you that don't remember it, here it is. Here, that move there. So imagine that we clear this resistance. This is the 2019 high that we're struggling with now, and then the 2018 high, which is at $85. Then we've got a clear run to above $100, as a matter of fact. We're really 110 there. So it's building up to potentially extremely bullish. However, there's lots and lots of resistance, and we've got the bearish divergence, so all these things we've talked about over the last months in the market, and it definitely is struggling. So here's the struggle going on here. Keeps looking like it's going to go, and then it doesn't make the break. Here it is here. I should extend this cigar here further. Whoops, that was a bit of a mistake. What happened there? Managed to lift the Bollinger Bands off the price action. Sorry about that. They should go back now, but they don't want to do it. Oh, I'll do that later, if that's okay. So what I was trying to do was extend this here, and so the resistance continues. So we broke down, hit support, bounced up again, really, viciously down, up, and then, but now been stifled by resistance. So watch for the breakout. The key level, very, very clear key level, 77.80. At the moment, it doesn't look as though it's ready to do it. So we may have to wait longer days or longer, or fail, one or the other. But if it does fail, then we've got strong support at 68. Okay, so now moving to the stock indices. Any questions, that Dan?
Oh, Trevor, that was just the one on the gold so far.
Okay, man. Okay. There we go. Oh, that is not right. I do fix all that properly. It's got two different scales there. Okay, so now there was really a big event during the week, which was the Amazon results, which were terrific, but disappointed the market. So let's just actually start by looking at Amazon first off. So look at that, Friday, big drop there. I mean, just overnight, sorry, that big drop there. We were squeezing, but that was, of course, because of the waiting for the results. But the results themselves were actually terrific. Now, I want to show you something. I hope I can show you this. Dan, can you see a graph now of S&P versus its seasonal pattern?
Yes, I can.
Yeah, okay. Now, let me just tell you what we've got here. The black line here is the S&P. Then the red line, which is up till now, you see the beginning of August, the black line is the S&P average, historical average. It's not the S&P, it's the historical average from 1990 through to last year. So averaging each day's movement, percentage up and down, gave us this pattern. The market went up every year, but what it had was a very distinct seasonal pattern, which we're starting to go into now. The gray one is the same line, but excluding the year of 2009. 2009 was exceptional, and it exaggerated the black line here, made it much lower because of the 1 year being so much worse than everything else. So normally, let's say it's this, but what I want to show you is that normally, and very consistently, in fact, I can tell you that we have between August and October, we have weakness and extreme weakness into a low in October, and then a bounce, strong bounce in October. And this happens powerfully almost every year. So we're right at the start of it now. Also, the volatility is also higher in this period as well. So what it's telling us is that we're coming into a cyclically weaker period with higher volatility, which can sometimes move climactically into October and then bounce out very, very strongly in October. So there's some great opportunities coming up in here, but watch out for the volatility and the and also the easiness in the market. And I think this very nonplussed, disappointed response to, what was it, 27% increase in income or something like that. I mean, phenomenal actual results, but yet it was not enough to push the price up. And this is when markets start to do that, go down on very bullish news. It went down 8%. It's a massive drop in a big stock, important stock like that. It's a strong message when only, even the best news disappoints the market. The expectations of the market are so high currently. So these are warning messages. The market is really speaking very loudly while it makes new highs. So here's the S&P. and all my Bollinger Bands have gone on to a different scale. Oh gosh, let me just delete it from there. That'll be better. So the weekly chart, you know, here it is. We're going up and up and up here, and we had that sell-off, then the bounce from the Fed. So more dovish than expected, and up we went again, hesitating very slightly, but coming back to support here. This chart on its own, if I hadn't said anything else about it, would look very bullish, but the whole structure of the market, the lead is becoming fewer and fewer stocks, and they are not just the FANG stocks, even some of the FANG stocks like Amazon are not looking great. There's only a couple which are responsible for driving the indices up. So yes, it's all, you know, higher lows, higher highs, you know, very good RSI, MACD is positive. Of course, the weekly patterns are all positive, but we're getting many warning messages here. So if you're long of it, tighten your stops. You know, thing that has made you money by having wide stops or buying the dips all the time has always worked. You know, buy the dip, buy the dip, buy the dip, buy the dip. You know, the time is coming to an end, I think, for that certainty. Looking now at the Tech 100, again here on the face of it, a strong market, higher lows in here, and just a little bit of easiness in here. But you know, inside that, the whole structure of it is weakening. It's fewer of the 100 stocks that make it up, which are responsible for keeping this up. More and more of them are below their 20 and 50-day moving averages. A very weakening structure. The RSI has actually got a bearish divergence in it. So high, higher, high, lower high here, but of course we've had loads of those in the past. But you know, this run here, we had higher highs in the RSI, now we haven't. We've got the same in the MACD. We've got some warnings here, but this has been a long bull market with many warnings, which didn't turn out to be right. This could be just another one, or it could be, you know, what we're seeing in that seasonal chart beginning to start. Now the ADX on this is at 21. The US 500 was at 14, much lower. Trend is much stronger in the Tech 100 than in the US 100, US 500. In the FTSE, the ADX is at, in the UK 100, the ADX is at 28, but it's a strong trend, but not an uptrend. This is a negative message from the weekly MACD here, and that's because of this incredibly strong resistance level. I always talk to you about this multi-year consolidation here, 4-year consolidation here. We moved very powerfully up to it. It's stopped, and you know, that is a brick wall that it's run into here now. It will do well just to move sideways, and that will be relatively steady, but it's weak. Actually, we've got a weekly negative MACD. So lots and lots of resistance. This is singularly unattractive market at the moment, and with so much resistance above. And going to the DE30, finally. And here the ADX is at 25. And so just to remind you the order of things, the strongest positive ADX, sorry, let's go to the weekly here. So we've the MACD is negative on the German 30. So the ADX reading is of a downtrend, and the ADX reading is at 25. So we've got a pretty strong weak trend in this market, not strong trend, but weak trend. And so it's consolidating and it's rather weak. It needs to break 16,000 obviously to clear that high, but it looks like it will do well just to move sideways around here. So in order of attractiveness, we've got the Tech 100 still the most attractive. Next, the US 500, and then the DE30, and then looking quite awful, the UK 100. But beware of that seasonal pattern. It's a strong one. I notice it every year, and you know, it tends to be there. And watch that, particularly that October pattern of going into a low and then moving violently out of the low and starting a very strong bull run at the end of October. Okay, Dan, did we have any questions?
No, that was just the one question on gold today. Thank you very much, Trevor. I think if we can wrap up now for the day. Well,
Okay.
Thank you very much for attending, everyone. Please join us again, same time, same place next week. And don't forget that we'll be posting this webinar to our YouTube channel in a few hours or so time. So if you came later and you want to watch from the beginning, you can do so on our YouTube channel. Or if you just like to watch a certain piece again, you can go over to our channel, and don't forget to subscribe and click on the bell to get notified. Okay, anything else to add, Trevor?
No, thanks very much, everybody, for joining us. And be careful out there. Tell your friends to be careful. Tell them to listen to the webinar, the YouTube recording, and to pay attention to that cyclical behavior, which is a strong message. Yeah, may the trend be with you. Thanks, Dan.
Thanks everyone. Bye-bye now.
Bye-bye.